Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a quick reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, XRP is taking over right now very quietly. Right now, there's a narrative forming around XRP that most people still aren't paying attention to. And that's usually how it all starts, ladies and gentlemen. Because while social media engagement is down, while crypto sentiment feels dead, and while most retail investors have mentally checked out, something very big and different is happening behind the scenes. XRP is being accumulated not by hype traders, not by retail FOMO, but by entities that move early and move size. Before anyone jumps to conclusions here, I want to be very clear. This doesn't mean tomorrow is the day. This isn't a call for instant price action. What this is positioning. That matters. Before we talk about that, I just want to thank everybody who takes the time to like, share, subscribe, and comment. These small things really do help the engagement, which helps me bring more videos to the brighter crypto market. Thank you very much. So let's talk about what's happening, ladies and gentlemen. Whales are moving XRP, but not the way that you think. Over the past several weeks, we've started to see a noticeable shift in XRP in on-chain behavior. If you pull up exchange inflow data, especially on Binance, you'll notice something interesting. Most of the inflows aren't coming from small retail wallets. They're coming from wallets holding 100,000 to a million XRP and even a million XRP plus. Pause for a second. Let that sink in, okay? Because this is where a lot of people immediately say, whales are selling, distribution phase, smart money exiting, blah, 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 blah. But that's not the full story. If you look at the value bands on-chain, you can see this clearly on charts. This type of movement often happens during consolidation or controlled pullbacks, ladies and gentlemen. Let that sink in. This isn't panic selling. This is active trading behavior, okay? Active trading behavior. XRP holders are rotating liquidity, capturing volatility, and repositioning. A 40-cent or a dollar swing on a six-figure XRP position is not noise. That's a strategy. And I want to correct something here because this is important. This does not mean whales are done with XRP. Historically, this behavior shows up before accumulation resumes. That matters. Why whale activity right now is actually very bullish, ladies and gentlemen. Now, again, I want to be careful with wording here. This doesn't mean price instantly reverses, ladies and gentlemen. But if you zoom out and look at previous cycles, distribution during periods of low retail interest often happens right before liquidity dries up. Google search trends for XRP are near multi-year lows. Social media discussion is muted. Crypto engagement across the board is worse than prior bear market lows, ladies and gentlemen. And yet, the on-chain activity hasn't disappeared. Think about this. Let this sink in. This is exactly when long-term positioning usually begins, ladies and gentlemen. Now let's talk about ETFs, because this is where it gets interesting. If you pull up ETF flow data over the last several weeks, the contrast is impossible to ignore. Bitcoin spot ETFs recently recorded net outflows of roughly 161 million on December 18th. The only Bitcoin ETF that has held relatively strong was BlackRock's IBIT, while the rest of the complex saw capital leave. Now compare that to Ethereum. Ethereum spot ETFs recorded approximately 96.6 million in net outflows on December 18th. With BlackRock-related ETH products accounting for over 102 million in selling pressure. Think about this, okay? So let's pause right here. Bitcoin ETFs, minus 161 million. Ethereum ETFs, minus 96.6 million. Ladies and gentlemen, now look at what happened at the same time with XRP. XRP ETF flows, this is the different story. During that same period, XRP ETFs recorded net inflows of approximately 30.5 million in December 18th. Not flat, not neutral, positive. And this wasn't a one-day event. Over multiple trading sessions, XRP ETFs continued to post consistent inflows, even while Bitcoin and Ethereum ETFs experience sustained outflows. That's rotations, ladies and gentlemen. So now, which XRP ETF has the most inflows? This matters. If you look at XRP ETF trackers, here's how things stack up. Canary Capital's XRP ETF, XRPC, the largest XRP ETF by assets under management to date and the top inflow leader, 21 shares XRP ETF, now holding nearly $250 million worth of XRP, recently becoming the second largest XRP ETF. Bitwise XRP ETF, consistently ranking among the top daily volume leaders. Grayscale's XRP Trust, maintaining strong participation despite BTC and ETH outflows. On several trading days, XRP ETF volume exceeds 60 million, while some sessions closing nearly 100 million. This is not retail. Well, who's buying XRP ETFs right now? This is the key question, ladies and gentlemen, in our metrics, our research, our recce. This is very, very important, okay? Retail engagement is objectively very low. Search interest is completely flat. Social engagement is near cycle lows. Retail traders are largely absent. They've lost hope and thrown in the towel after being cut up like sushi. Yet XRP ETFs continue to see tens of millions of dollars in daily volume. So ask yourself, who's buying? This is smart money, and we need to call it what it is. This is smart money. Asset managers, institutional allocators, long-term capital. Smart money doesn't wait for hype. Smart money positions before narratives change. If this was retail-driven, engagement would be exploding. It's not. It's flatlining. Let that sink in, okay? Let's look at this from a historical analogy standpoint and examples. The Roman road analogy. Think back to ancient Rome. Before Rome conquered new territories, ladies and gentlemen, they didn't send armies first. They sent engineers. Roman roads were built before expansion, before trade, before taxation, before conquest. And here's the key part. When the roads were finished, the outcome was already decided. Merchants followed. Soldiers followed. Cities followed. Empires followed. No cheering crowds, no headlines, just quiet, plain, boring infrastructure and inevitability. XRP right now isn't the army. It isn't the celebration. It's the road. And smart money has seen this story before. How smart money actually buys. Ladies and gentlemen, smart money doesn't buy headlines. Smart money buys regulatory clarity, liquidity depth, institutional access, long-term settlement demand. That's why XRP ETF inflows are happening during a down market. Let this sink in, ladies and gentlemen. That's why XRP is outperforming Bitcoin and Ethereum on flows, not price. This is exactly how smart money moves. The Oracle of Delphi effect. In ancient Greece, crowds gathered after the prophecy, but kings and generals arrived before. The Oracle of Delphi didn't speak loudly. There was no public announcement, no certainty, and yet the most powerful people in the ancient world repositioned armies, alliances, and empires based on whispers, long before the public understood what was happening. Retail investors today are waiting for certainty. Smart money never does. XRP doesn't need mass belief yet. It only needs enough belief from the right players. That's how history actually turns. XRP ETFs are quietly locking supply. Right now, there are approximately 700 million XRP locked inside ETF products, representing about 0.7% of total supply. This is very early. But if ETFs accumulate, if demand continues, by the end of the first full year, ladies and gentlemen, XRP ETFs could realistically control 10 to 15% of total XRP supply. Think about this. 10 to 15% of total XRP supply. This has got to register here. You got to write this down. Extend that into late 2026, and you could be looking at 20 to 25% of total supply locked away. That's when supply dynamics change permanently. That's not hype. That's math. Think about medieval grain vaults. In medieval Europe, power wasn't held by the loudest kings. It was held by whoever controlled the grain vaults. During years of surplus, grain was quietly stored. No panic, no urgency, zero drama. But when shortages came, and they always did, the people who owned the grain controlled prices, politics, and survival itself. Here's why this matters. ETFs locking XRP supply today is the modern version of grain storage, ladies and gentlemen. No one feels the pressure yet. The shelves still look full. The market still looks calm. But once demand spikes, whether through regulation, utility adoption, or macro stress, the supply is already gone. And the people who position early don't chase price. They set it. I want you to think about the longbow effect. During medieval warfare, knights believed heavy armor won battles. Then the English longbow appeared. It wasn't flashy. It wasn't glamorous. It didn't look impressive, but it changed warfare forever. The longbow didn't win by speculative. It won by efficiency. XRP right now isn't flashy. It isn't exciting. It doesn't feel powerful. But efficiency always wins long-term, ladies and gentlemen, always long-term. Markets, like wars, don't reward drama. They reward effectiveness. Think about the late Roman Empire parallel. Late-stage empires don't fall because they stop working. They fall because they become too expensive, too slow, and too complex. Rome didn't collapse overnight. It became inefficient. And when inefficiency breaks down, settlement systems break first. Taxes, trade, payments. That's why settlement layers matter more than narratives. XRP isn't competing with belief. It's competing with friction. And friction always loses. Exchange risk reminder. Crypto exchanges aren't perfectly safe. Even the largest like Bybit have been hacked. In February 2025, Bybit recorded one of the largest crypto hacks in history, 1.4 billion stolen. That's why premium ETF custody and regulated platforms matter for institutional investors. XRP ETFs give this security and peace of mind. No external wallets, closed loop systems. USD withdrawals tied to banks. Ladies and gentlemen, what the Bitwise CIO just confirmed changes everything. The Bitwise CIO recently stated that XRP ETFs have been better received than Ethereum ETFs at launch. Over 1 billion in inflows in a down market. That's exceptional. 1 billion inflows in a down market. XRP isn't waiting its turn. It's taking it. Final thoughts. Smart money's preparing. Supply is being absorbed. Retail is asleep. And historically, that's when the biggest moves begin. Your engagement helps get this information in front of more people. Thank you so much for tuning in, for liking, subscribing, and sharing your thoughts. Your support allows me to keep bringing these deep dive, high-value insights to the crypto community. Ladies and gentlemen, we have a lot of things happening right now. You know, some of the big news you can see is happening again in India with the overall metals market, right? Stay with me. Today's rant, I'm going to bring all this in together, okay? India now is saying that they're going to let potentially their population monetize their gold holdings, very similar to silver. They have a massive supply about this. But gold is no longer being treated as a resource, ladies and gentlemen, okay? Its governments are moving to secure it so it can be collateralized in some kind of tokenized balance sheet in their domestic economies, right? That's so big. I can't even explain that. That's why we're seeing so much duress on the metal markets all over the world. People are taking physical delivery. They're calling it in. This to me, this is a black swan event that no one's really talking about. I see this every day, and I can tell you this. We go back to the analogy that I tell you that XRP is like oil. Retail is throwing in the towel. They have basically been cut up like sushi. They have no Gucci convictions left. They were over leveraged. There's a lot of things. They had unrealistic aspirations about why they got into this. They didn't do a recce. They didn't write everything down, and my heart goes out to them. That's why I'm thankful for everyone here who's watching this right now. This is for you to get that wolf pack viewpoint of this, okay? Think back to when the oil was found in the United States of America, when that was happening by the Rockefellers and the oil booms, okay? Think about this. How many people sold away their land when they had no idea what was under it? Unbelievable, right? Think about this. They sold the rights and they sold their land away and they had no idea what was underneath it. You're seeing everybody who throws in the towel with XRP today is very much like that. Now, maybe they were overexposed, over-leveraged. They didn't do this the right way. But when you sell your retail XRP, you let it go, these ETFs are gobbling it up. And when you look at the leverage, I look at leverage metrics. It's so low, so that's not giving the pizzazz and some parabolic move higher. It's accumulating. Myself and my organization and others, we signed our lives away in the country of Indonesia. I love Indonesia. That's one of very special places to me. There's more metals in the ground in that magical place than you can imagine. When we signed our lives away to do geological surveys, we knew what we were looking for. We couldn't talk about it, but the mining companies who had hired us were competing with other mining companies, right? And what you're seeing right now, and why I'm telling you this is that the big institutions, they move in silence. They move in when it's boring. They move in and start doing everything when nobody's paying attention. In essence, they want everybody thinking it's over, it's done. They want to buy from you what you paid expensive at cheap. They want you so thrown out of the market that you hate the market. The same analogy with crude oil, okay, and the oil in the ground. Back in the day when Standard Oil started acquiring everything, they want to control everything. They want to buy from you cheap, you not realizing what you're letting go, okay? They want you totally broken. So now how I'm bringing into this and why is we spoke about on the map, we spoke about, the two new digital coins, Kazakhstan, Bhutan. Okay. Ladies and gentlemen, institutions and people that retain myself and who we work for, they buy the future. They buy consumption and demand downstream. Infrastructure is being built every day. Okay. There's so many things happening right now. And I talk to you about bringing all this in and why institutions want you to sell everything. They want to control all this. They don't want you to have anything. And in the future, what you own today could have a direct impact on the type of retirement you may have going forward, okay, and the financial freedom that you may have going forward. This isn't financial advice. This is just how I see it, right? The United States seized another oil tanker off the coast of Venezuela. There's a full-blown commodity war going on right now that nobody's talking about it because they're not allowed to talk about it because everybody's signed their lives away. That's why I always say legally, can I talk about this? Can I talk about that? I don't know what else more to tell you this, right? I would be very excited to keep accumulating myself what's happening right now in the markets. And I'm not looking at price points. I'm looking at future utilization. I'm giving you the analogies that I give to people in family offices, the ones I can in the time frame. Once our Patreon launches this week in Discord, you can hear a lot more of these rants, be more entitled. But the analogies are there. Why I said we are XRP oil holders, because what's in the ground is very valuable. They want to control the supply. We've got some acts that are going to be passed in front of Congress in the next year. That's going to have a direct impact. Right now is if you throw in the towel on yourself, then you're doing yourself a biggest disservice. If you're over leveraged and it's running against you, don't even look at it each day, right? Your smallest loss and your first loss is always your smallest. That's why I say smallest and first. But right here, if India allows you to monetize their gold, in India, the gold's never leaving there. Silver has been monetized in India. You see all these countries. Why I point this out to you guys, Bhutan, most people don't even know the Himalayan kingdom. Kazakhstan, okay, they're on the west side. They need to keep their gold in country to tokenize it on a balance sheet. That's what's happening, okay? And when you look at the BRICS unit coming against XRP, it really shows you a world situation, okay? And you can see what's happening in coordination. So as institutions begin to gobble everything up, why I say we're like the remora? Because we're swimming with them. We're letting them do all the hard work. We're letting them trace bales. We're letting them take care of the other prisoners. We're letting them take us to the promised land. The one thing you have to keep is your mind conviction so you stay Gucci, right? But this is what's happening. These are major things. Next year, America Printed to Win, it's going to start, okay? And there's a lot more happening. But I want everyone to have a blessed Sunday. Thank you for spending some time with us. And as always, right, have a great day and stay emotionless and watch XRP. This content is for emotional and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a financial licensed advisor before making investment decisions. And again, gold is not being treated as a relic, ladies and gentlemen. It's across the system. Governments are moving to secure gold domestically. They're preserving it while extracting balance sheet utility through collateralization, leasing it, future liquidity frameworks. This shift is quiet but consistent. Gold, silver, it's reemerging as international collateral in the system, using for the BRICS unit everything, where private and sovereign balance sheets, they need it as function as one. Morgan Stanley came out with a report estimating India's private gold hoard at around 35,000 tons, among the largest in the world, and it continues to grow. So again, I keep throwing this out here, why India, the silver, the gold, what they're doing, right? And then the duress and the commodities market being pulled and what I believe and everything like that. It's very exciting times to be alive. Stay with us at the Wolf Pack. I'm going to do my best to not let your mentality shake you out of this, right? And understand why owning is important and why you have to be excited and why this is happening, okay? Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves to never happen again, Or you could be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, leave your comments with your thoughts. Turn on your notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.